Good morning, good afternoon, everyone. Thank you for joining us today on our February edition of ARIVE Partner Spotlight. ARIVE Partner Spotlight is a monthly webinar series that we host where we invite industry experts and thought leaders from our lender partners to discuss topics that are relevant in today's market and gain insights that can hopefully help you grow and scale your business. My name is Harish Tejwani. I'm your time traveling host today, dialing in from Delhi, India, which is a few time zones ahead of all of you. So if you spot me yawning or jet lagged, remember this golden rule. Underwriters never sleep, they merely calculate. Joining me also today is my wonderful co-host, Amy Hulett. She is dialing in from sunny California, bright and early. This webinar will be recorded and the recording will be posted on ARIVE YouTube channel. If you have any questions, you are welcome to ask them on the Q&A tab below. So this will be interactive. So our panelists will answer them as they come. Now, Valentine's Day is just past us, but we will still be sharing a lot of love today. And I'm very excited to have two special guests who are coming back on this show from our awesome partner, the Loan Store. So joining us today are Will Pendleton, their charismatic Chief Revenue Officer, and Philip Schulze, their unstoppable Managing Director of Production. So thank you to both for joining us. I've known both of you since ages. You guys are awesome to listen to. And you'll be covering very hot topics today about interest rates, market outlooks, non-QM, use of technology, so on and so forth. So without further ado, I would like to get started and hand the baton to maybe Will yourself. Amy, do you want to say anything before we get started?
I just want to thank everyone for being here and for Will and Philip for sharing their time. I'm looking forward to hearing everything they have to share today and kind of get caught up on what's been going on at the Loan Store. So I'm excited just like everyone else.
So go ahead, Will, the floor is yours, if you can hear us.
Okay. Yeah. So 2-second introduction for those of you who I haven't had the pleasure of meeting. Will Pendleton at the Loan Store. My focus is really broker experience, and the revenue title is just a fun thing for me. But we've been fast at work since we got to the Loan Store from Home Point. The majority of our team came from Home Point. If you didn't do business with us there, you may know some of our team members from the Caliber days. So a lot of our leadership has been together for 10+ years. I think the way you should think of us is we're a fast-growing, hungry lender. We're going to fight for every loan. And we're going to talk about the market, but I wanted to just give you guys a hello, a kind of a brief introduction to who I am for those of you who I hadn't had the pleasure of meeting. But we're really excited to engage with you guys today, and thank you for Amy and Harish for having us. So, Philip, you want to say a quick intro, and then we'll get into it.
You got it. Thanks, Will. And I think Harish used the word unstoppable. So I'm the unstoppable managing director. I lead the production team here at the Loan Store, and certainly thrilled to do it. Have an amazing team that I'm excited to tell everyone about a little later in the show here about how awesome they are. But I've been doing this for 30 years, as Will pointed out. We've all worked together for 10+, Caliber, Home Point, and really, a family affair to a certain degree. I mean, it's something that we enjoy doing, this mortgage thing with each other, and it is definitely something that we're growing every day because of it, with the time that we spent. So that's who I am, and Will, yeah, let's get this thing started.
Awesome. Yeah. So I think that if we go into the market, we turn the page to 2025, all the industry expectations are that we're going to have a higher for longer expectation in the market, right? And I'll give you my prediction in a minute, but I think that we can say, okay, look at last year and pretty much copy and paste to this year. Is a lot of what you're seeing from the kind of stalwarts as far as the NBA and Fannie Freddie's forecast. It's very much in line from an overall volume standpoint. I think that a higher for longer interest rate environment is likely. You've seen the market be relatively flat. We've had a couple up down moves here recently as the new administration starts to implement some of their policies, and you're seeing the market reaction, the bonds react to that. But if I'm going into this mindset or I'm going into this year from a mindset standpoint as a loan originator, I'm going to expect the worst, which I think the worst is 1.7-ish trillion dollar market opportunity. It's going to be the higher for longer interest rate range that we're in. I can't really see us going much higher than our high points have been. And approach this to say, how do I thrive in an environment like that? I'm going to share my perspective on it. I do also think that you never know how effective the Doge effort may be, and not to get political at all, but just to recognize that there are some big things going on with the new administration, and that could provide relief, because that is one of their tenants. They do want to make things more affordable for homeowners, and they want to grow homeownership. So we'll talk about the potential for that. But I think if you set your sights and say, it's going to be tough sledding. It's going to be similar to what it has been the last 18 months. How do I thrive in an environment like that, right? That would be my just entering mindset, and it is ours as well. If we get some downhill momentum because of some of the stuff that's going on, if that kicks in and it starts to bring the 10-year down, great. We all know how to operate when rates go down. But it's how do I continue to grow my business and thrive when interest rates remain at the higher level. I think that's where I would be focused. That's what our game plan is. A little bit about us. We came over in April of 2023. We transitioned most of our team in April. And what makes the Lone Star different than the other organizations, or different than maybe potentially some of our friends out there, is we really believe that the people are the secret. We do. We believe that we have a very special culture. We believe in expertise. So we have a lot of experts, whether it's on the sales side, on the ops side. When the loan goes off the tracks, which is, as well as you design the process, it's going to happen at some point. We all know this is a very emotionally charged transaction. And when it goes off the tracks, you need people that you can trust. And, so the basic principles that we applied in a high interest rate market to start down the path at the Lone Star was to not overcomplicate our process and technology, and to really go deep and wide into product. But all of that is backed by the foundation of, what I think is the best group of people that I've ever worked with in this business, and everybody, at every key position is service first, and they have a ton of expertise, right? So that has helped us to grow. I don't want to list the stats. I'd rather not put them out there, but a tremendous amount in a very short period of time. And our expectation is that we'll continue to grow and serve more brokers as we go through this year. So, Philip, if you want to jump in and just kind of talk about mindset, then we can go to some of the specific strategies of what you might do to have success in 25.
For sure. Thanks, Will. Yeah, and it's the mortgage industry, guys. It's not, it's unpredictable, and definitely something that the MBA and the agencies, and they all put out these predictions, and more times than not they're wrong, right? And so to Will's point, I think expect the worst, and hope for the best and plan for the best, because that's where I think you're going to get into another year similar to what we had last year. But I think as the year goes on, there's certainly going to be things that will that could push the market in a positive direction. As far as some of the trends go, in 2025, I think we're seeing a rise of non-QM lending, and just alternative financing around agency product. Not a lot of folks qualify, and one of the issues continues to be, in terms of outlook and trends, one of the issues continues to be is housing inventory and affordability challenges, right? And so that's where you're seeing non-QM product roll in. That's where you're seeing, just alternate doc type programs roll in order to, still maintain and have a flourishing mortgage market this year. I think some other trends I think that jump out are, we're going to continue to see technology and automation. AI is huge with what's going on in the market today, and you're going to want to work with companies that leverage automation and technology and AI technology that will just provide a lot more seamless and speedy results for not just loans but daily processes and interactions that you have there. So a lot of things going on this year for sure. A lot of the similar things that we've seen in the past, like inventory, affordability challenges, but from our perspective, and I think we'll kind of hit on it there towards the tail end, having a strong lender partnership with again, we are moving quickly, we're growing quickly. We are have our hands into all the latest technology and AI, but what you're going to see is a lot of old school approaches when it comes to relationship. We want deep dive relationships. We don't want to set up with every loan officer on the planet. We'd love to, but we want deep relationships that we leverage each other to help. We're going to help you grow in this market, and you're going to help us grow in this market. And at the end of the day, it's going to, those originators that have a really strong lender partnership, those are the ones who are going to, if rates stay the same and do what they're doing, having a strong partnership is going to be something that is going to get you through this year. So I'm if we want to move on to the next
well, Hank, I just want to jump in and add to that a little bit of perspective. I'm really excited. I don't think I teed it up by saying how excited I am about 2025. From an investor funding standpoint, there is a massive appetite for new approaches to enter the market. And, we've been fortunate to build a lot of relationships over the last 20 plus years. And we've had a ton of investor conversations over the last 90 days specifically. And we're talking about addressing a lot of the big detractors, right? A lot of the headwinds that we're talking about. We're coming up with innovative products, and there's an appetite from the capital side to do just that. If you talk about affordability, right? I think you look at it two ways, and I am looking at it two ways, right? We're going as wide as we possibly can to bring the best product to the market as it relates to your traditional products that everybody's familiar with. We leaned into non-QM really at the beginning to middle of last year, built an underwriting dream team, and we were the fastest growing non-QM lender in history, right? So we're the fastest growing non-QM lender in wholesale. The reason for that is we simplified the products. We went and got the best possible underwriting team we could grab, best underwriting leader that I'm aware of. And then we have deep relationships on the investor side. So the non-QM market is going to grow. I've seen projections of 15 to 25% growth in non-QM this year. So if you focused on it or dabbled on it, either way, non-QM is providing more solutions for you to continue to grow your network. and serve your customers. And if you haven't engaged with TLS's non-QM platform, I'll plug that for sure. We're very proud of what we've built there. But then we talk about the other two main. Affordability is a huge challenge right now. If it's higher for longer, we all know that just means that there is a smaller piece of the pie that can actually afford to have a down payment and to afford the overall DTI burden of everything else that we're trying to carry in life. There are some really cool affordability products that are going to be introduced in 25. We're piloting something right now that I'm not at liberty to speak to, but it is going to be very exciting. So stay tuned. We have a solution that's going to be broad-based, that's going to really help to accelerate or to expand the box from an affordability standpoint. So that's coming soon. We look to do that, by the beginning of Q1, and we'll make sure, Harish, that you're the first to know about it. But then, I think that also for those of you who haven't focused on builder relationships, I do think that's the biggest headwind. I think when we talk to most of our partners who are the most insightful about navigating different market cycles, affordability is obviously there, but the lack of inventory probably outranks that, right? And so what are we doing to address that? I have heard a lot of really good things from the insiders as it relates to the new administration on exactly how they're going to tackle that. And I do believe that we're going to start to make progress there. That's a longer burn, but if I'm an originator, I am absolutely leaning in to my builder relationships. I'm nurturing them. It's playing the long game, right? You're playing the long game there, and there's a lot of competition. And we're going to help you guys as well. We are leaning into our construction product suite. We will be rolling several construction products over the next 2 or 3 months. And we've just hired a new specialty lending director so that we have more bandwidth there. And he's got a deep experience in the construction builder side. So we're stacking the deck when it comes to how much private capital can we bring to bear, how many different investor resources. Let's find the best investors with the most innovative approach to product. And so we are going to be rolling product every week, every 2 weeks for the next 3 months. And so we're loading we're loading up on products so that you guys have more options to serve more of your existing base. And then we've got a few flyers that we're taking on some innovative products that you probably haven't seen before. Actually, I know you haven't seen before. And then I'll sprinkle the last reason of why I'm excited. I had a conversation on Friday. There are talks about the diminished role of the agencies and the increased role of private lending actually happening this time, right? So, as it relates to our approach, the more we are very well positioned because we interact with so many different investors. But I can tell you, if we really do go down that path, it's going to be good for everyone. I believe that we'll see efficiency gains in the market as more private lending comes back into play beyond just non-QM, right?
Cool. Yeah, good stuff, Will, for sure. Let's move on to the next one. From a tech standpoint and tools, really to I mentioned earlier, one of the things that we do from a process standpoint, and I'm sure if you haven't yet seen the announcement around Smart Start, we rolled that out last week. Reach out to your TLS account executive for more information there, but to kind of just improve our process, to improve the experience, we've rolled out Smart Start, which is basically a income and a credit approval that when you submit a loan to the loan store, you're going to get an answer, based on that, income and assets within hours, and you'll get an initial approval out much faster, which at the end of the day, once you get that approval out, that's going to start the clock and get things rolling for even closing faster as well. Some additional tools from the loan store, our marketing hub. Brenda is incognito down there in the box, but she's done an amazing job with our marketing hub for our partners. It's something that marketing is definitely something that sets you apart in an environment like this, but to do something from scratch is pretty time consuming. And so a lot of partners, a lot of our brokers reach out to us to help, develop, high quality, very compliant marketing, assets that you can use. And our marketing hub does that for you. You can get personally designed flyers. You can get, PowerPoint presentations, graphics, kind of your one-stop shop from a marketing standpoint to help you grow your business. And so, and then last but not least, we got to put a plug in for ARIVE, right? They're our host today. Amazing tool, and we hope and certainly push more of our partners to use their tools, because they definitely make your upfront job a lot easier from a product and pricing standpoint to a submission standpoint. And we continue to work with Harish and his team at ARIVE to get us integrated there from that standpoint. So that, from a tech and tools and just process, that's where the Lone Star is going to set apart from others out there. So yeah, and anything to add there from a process or tech standpoint?
I'm excited about, it feels like we've been talking about automation and, now the latest is AI for a long, long time. And I'm excited now that we're seeing tangible impact to a lot of these kind of bigger ideas. So this stuff's real. We're seeing real efficiency gains on our side. And obviously we're going to pass that through in the form of just being able to go faster with TLS, right? And we believe we're already pretty nimble before this technology rolled out. Now we're able to roll it out across more products. We're going to continue that effort and just go faster. And then, there's some stuff that we're doing behind the scenes with some real exciting AI engineers. So there's a lot more to come. I actually believe that we can make all of our associates more productive in what they do through the use of intelligent AI. And then therefore, that's just going to make us faster to respond, faster to provide service, and be able to grow in a sustainable way, right? So I think the last company we started at 250 associates in 2018 at Home Point. We took it to 4,700 associates. And then you run into a different market, and you're talking about layoffs. And what I would like to do is I'd like to scale our very skilled associates through the use of intelligent technology so that we don't have to use that word anymore. It's good for all of us if we can navigate things in a more efficient, sustainable way and build the company right. That's everything that we're focused on here. And so really excited that the technology is going to make our associates more efficient. It'll allow us to grow in a more profitable and sustainable way, and be around here in 10 years, 20 years to support you guys.
Yeah, and that automation also will create additional capacity when the refi boom does hit, and when rates do, which we all expect them to, when rates do drop, we're going to be in a very good position to handle a lot of those refis as well. Well, cool. Well, Will, you mentioned a lot of innovation and innovative products earlier. Let's kind of go on to the next topic here from an innovative lending standpoint. Non-QM top of the list for sure. What you talked a little bit about what's going on with non-QM. Where do you see this thing going? We are, and I'm going to brag a little bit. We are one of the fastest growing non-QM lenders in the space today. We were last year. We're going to be this year, and so we're doing those things to help from a non-QM standpoint. But there's additional things on top of that we do. But I would love to hear a little more insight from you on non-QM and where you see this going.
Yeah. So I got pulled into non-QM in the very beginning in 2014, right? At Caliber, our parent company raised about $1.5 billion to start non-QM when the only folks were in it were Citadel and Angel Oak. right? And I was positioned between the fund and the executive team. The executive team was from they're from Countrywide, and they didn't want to do anything that was outside the box. And so it was a crazy learning experience for me personally. And one of the things that came out of that was we figured out how to launch it. We figured out how to securitize it. We were the first to securitize post-crisis non-QM with our team, and did 10 AAA rated securitizations. Only had one default and 7,000 loans. So it's like all the misconceptions about what non-QM could be were just, it was just fear. It was unbased, right? And it's actually really good loan production. The loans perform incredibly well. They're very valuable in the secondary market, and they help us expand credit to business owners and to investors. And so I'm a big fan of non-QM because of my history. What we've done here is we've been able to leverage that same relationship that I referenced 10 years ago, which is with pretty much the most successful non-QM securitizer. And now, we were in the trenches with them in the very beginning. And so now we have, they are probably one of our strongest external relationships in the business. And we're their top investor. We represent over 50% of their securitizations on a monthly basis. So we're leveraging a lot of experience. I think that one of the misnomers about why would I try TLS as it relates to this nuanced product, I want to go to a lender that this is all they do. Well, I would say that we have a unique formula. We put just as much focus into being great at the niches. And I think that's a really important theme to understand TLS and the value prop we bring. I also think it applies to an LO. If I'm an LO and I'm going to offer a niche product, take the extra step to develop the expertise in that niche and make it a strength, right? So that's what we did. When we had an opportunity to launch non-QM, as I said earlier, we went and got the best absolute talent to back the program so that you have certainty when you send a loan that's a little bit different, that's outside the box, or maybe it needs an exception. You need the best possible credit managers to interact and understand the nuance of that loan and get the loan approved. So 40% of our non-QM production has an exception, at least one exception associated with it, right? So that's why the first priority was, okay, we've got good pricing, we've got some good investors, we have enough to launch a product. Before we even sent a marketing email, I went out and started recruiting the best underwriting manager that I know and said, you have the ability to go hire a dream team, go do it. And so, yeah, we've gotten better as we've gone along. I think that we're about to take a really big step, because if you look at it, we've got the flex income product. That's kind of all of your income options from a consumer standpoint. So that's the consumer loan program. We try to simplify it, right? Underneath that product, there's a lot of complexity, but I didn't want to roll 10 products. It's like we've got our consumer product, that's flex income, and then we've got the DSCR. We're starting down a campaign, and in 2 weeks we'll launch it, and it's called DSCR Done Right, right? So DSCR Done Right means shifting away, and this is a lot, Therese, you probably understand this, right? From the tech standpoint, to get away from TRID. But when you do a DSCR loan, it truly is business purpose. And so therefore, you don't have to follow TRID. And so you go from 60-page initial doc set to 16 pages, right? So we're in the process of building that right now. We're going to launch it. There are two main benefits. One is it's truly a business purpose loan. It's going to be less compliance oriented. We're not following TRID because you don't have to on a business purpose loan. And then secondly, there's comp flexibility, right? So it allows you as an originator to make a point up front and then also elect how much of the rebate you want to assign as a credit or take as compensation, right? So all of that is going to launch by the 1st of March. So I call it DSCR Done Right. And that's just going to help us to serve more of your customers and to give you a better experience overall. We're the largest originator of HELOCs. So non-QM, probably my personal favorite. If you haven't tried us, give us a shot. And, I would say the thing I didn't talk about, Philip, you should have buzzed in, is we're a growth monster, right? Like we're very, very growth oriented. And so I expect to double, even though we're the fastest growing last year, I expect to double our non-QM volume. And so we will always be priced for growth. We'll always be priced with a marketing price. So pricing is not something you put on a tagline, and I guess some people do, but I would say, from a consistency standpoint, and I live in the surveys, we are consistently very aggressively priced across all of our non-QM products. So if you haven't checked us out and you've seen us on the top of the board at Loan Sifter, but you're like, hey, I only send my non-QM to somebody where this is all they do, give us a shot. I can promise you that, the experience is going to help you. And, I know the products are different. As we said, 40% exceptions. You got to have confidence that you're dealing with experts that can guide this through. And a lot of our people on the credit side have been doing non-QM for 10 plus years, right? So it's hard to say that. I mean, it started in 11 years ago. I was there.
Yeah, and I want to drive that point home, guys. It really is something that, again, sets the loan store apart from others out there. I mean, there's I've gone to trade shows and things like that, and I'm seeing non-QM lenders pop up left and right? Because that's the growing trend. That's the that's the buzzword. Everybody's trying to get into this high margin type product, right? Where we stand out is we've got the experience. We've been doing it longer. Our team has been doing it longer than most others in the market today. And that experience helps get more deals done. Will touched on 40%. 40% of our non-QM loans today have some sort of exception on it. You wouldn't have an exception if we were a underwrite by the box type lender. So our underwriters, who, by the way, are a completely separate team from our agency product. So they only look at non-QM loans day in, day out. And so that experience, that can-do-itiveness on trying to make that deal work, says, hey, if I can get a little more assets, maybe we can get this deal done. Or, but they, our underwriters are trained, their DNA, they're programmed to help find ways to make those deals work. So I really want to drive that home before we move on to HELOCs, because that's one big thing right now that again, experience, you know what you're going to get. If your deal doesn't fit in the box, that's where you reach out to your loan store account executive, say, hey, I've got one that's close. What do you think? That's where our team jumps in to save the day. So
yeah, we on that, staying on that thought line, we do have a scenario desk that leverages an AI automation tool to read the bank statement income. And so we can produce a response in, usually under 4 hours on the scenario as it relates to the income, right? Which is very, very valuable. So yes, your AE is going to be super knowledgeable. They're a samurai. The underwriters are great. They're very interactive. They're not behind some, double wall of secrecy. Like they're gonna be there to communicate with you and to support you. And yeah, if you haven't given us a shot, we can help you grow your business in the non-QM segment. One more plug there. We're coming out with I-10. So I-10 is coming very soon. I think we can get it done in a couple of weeks, which feels fun to say that, right? Because Harish, you were with us at Home Point, and we weren't very fast. we valued the I guess the principle of being nimble, but unfortunately, when you build technology over time, and I think Harish, you've been able to avoid this, right? But whether it's Caliber or whether it was Home Point, our tech was built in a way even before we got there to where it just had those developmental cobwebs, I'll call them, right? Where you've got this legacy tech that doesn't really move very fast. And so I remember asking our head of technology at Home Point near the end, hey, we really need a DSCR product. And they did a whole study and they came back like 3 or 4 weeks later and said, yeah, it'll be 18 months. It's like, what? We move fast here. It's really fun. One of the products we're going to talk about in a minute, we actually proved that. We rolled it in 2 weeks. we can move really quickly. We actually are living the principle of being nimble, and that's important because as the market, ebbs and flows and changes, or if, one of our friends reaches out with a really exciting affordability product like what happened 2 weeks ago, we can prioritize and we can execute, and we're going to continue to do that. So I would just say stay tuned. We'll stay engaged with Amy and Harish and team, and we'll give you first look at what's coming, but we have a lot of exciting products coming. So if you want to go to HELOC, Philip, I'll complement that message too.
Got it. Thanks, Will. Yeah, HELOCs, again, we've got a lot of things coming, but we also have a lot of innovative things that you may or may not have heard of. HELOCs, of course, everybody's heard of. We have a HELOC program here that it is fully automated program, in an interest rate environment that we're in. This is a super fast, all completely automated approval, not a human touches that approval on the HELOC. Basically, you plug in the information in as the originator, you send it over to the borrower to complete therein. They link up their income and asset docs, and you're done. And we're closing these in 2 to 3 days. They're funding in 3 to 5 days with rescission. And this is an easy way. Sometimes we call it a side hustle or mailbox money, but many of our originators that have embraced HELOCs, especially when interest rates creep over 7%, nobody wants to touch that 3.5, 4% interest rate, right? So with our HELOC program, they're able to tap into that equity to pay off those Christmas bills. I mean, we're still in February, bills are coming out now. Do home improvements, pay off college debt, pay for weddings. I've got one of those coming up too. So there's a lot of things out there that you can tap into. And what's great about our HELOC program is that it's fast, it's easy. It fits the box, you move on to the next one. And that's where the mailbox money comes in, because many of our originators go to their book of business. They kind of get the first 1 or 2, 3 down from a scripting standpoint, and then they cut it loose and literally are doing 10 to 12 of these from their book of business a month. And again, we pay 200 basis points on these HELOCs. There aren't many other HELOC investors out there that are paying 200 basis points. So, some key highlights there from HELOCs. Will, anything to add there before we move on to
Yeah, going back to the market opportunity, I think that as higher for longer stays, and then even if you look at it, the likelihood that we're going to go back to sub 3% interest rates is very low, to the point that you just made. Most people are going to stick with their current mortgage, right? It means that that combined with the fact that the American consumer has an insatiable appetite, and consumer debt is still over $1 trillion and at record levels. It means that this is a great environment for HELOC. So if you haven't yet transitioned to spending a portion of your energy on staying connected with your base through HELOC opportunities, you should. I know a lot of people over the last year and a half have converted over and have gotten some experience in the platform of doing HELOCs with different folks. This one is super easy. It's just a small investment of time, and then if it fits into the box, which is completely automated, there are no people that will touch this loan, then it flies through. So I would say it's a good HELOC option to start at the top end of your funnel. So you put it at the top end of your funnel, you spend 4 minutes on the application, boom, send the link to your consumer, and you're out of it. And it does have a tighter box from a credit standpoint because it's fully automated, right? So you're not going to cover off on some of the nuance or expanded guidelines that other second lien products will, and that's why we're adding more. So I would say start with our HELOC because it's great ROI on your time invested. And then what we'll do is we'll have a flow where if folks fall out or if they want another option, we're gonna go with a closed-end second and an additional HELOC product. I would say within the next 6 weeks. And yes, I know all this stuff's coming super fast, but that's how we roll.
That's how we roll. So we're going to keep moving here. We're coming up 12:40. So buy before you sell is another innovative product, and we're going to hit on these next 2 to 3 here, pretty kind of rapid fire here, so we can get everything in. But we also offer buy before you sell program. That's something that is somewhat unique in the wholesale space. There are a few others to offer, but we've got a great partnership. Many homeowners want to move, but they can't because they've got to sell their current property. And so our buy before you sell program basically offers a solution to allows the borrower to purchase a new home before selling the existing one. We do deep dive sessions on some of these products. This is one that we do a deep dive session on, once every month or so. I mentioned the portal, the marketing hub before. Previous recordings are out there around buy before you sell as well. So I would encourage you, keep an eye out on our marketing emails. Check us out on the portal from that standpoint to get a little more information around buy before you sell. But definitely it's a solution to provide an opportunity for your borrower to get into a new home without selling their existing one. And so with that, again, check us out on the hub. Simply Solar is one. Yep, we'll jump in.
All right, I want to jump in on this because I just told Brenda I want to rename it. I love how Simply Solar rolls off the tongue. But I do think that it immediately gets the originator's mind down the path of, does my client want solar? And it's preventing us from presenting the immediate and the largest point of value. I'm not the guy who comes up with the fancy names, but this, if I had to jump, this would be called the hero loan, right? Because it makes an originator into a freaking hero. It is an affordability solution that allows the consumer to take a quick online course and get paid 1099 up to $13,000. They can use that for their down payment. They can use that for reserves. So if I'm an originator, and I've talked to a few who actually do this, I'm searching my low down payment database, and then I'm going to all of those consumers who are a little bit tight. They want to buy they want to enter the market. They want to buy a home. They're just not necessarily there. You can infuse up to $13,000 into this. And it's not a DPA, it's just a traditional FHA loan. The bonus is that it is connected with the green energy effort, and they will get a solar install as a result of this. So they get up to $13,000 up front, can be used for down payment, can be used obviously to offset the cost of solar. The solar is then rolled into the loan, right? And so they immediately go through the homeownership training course that gets them to 13K. Then they meet with a solar agent. They design the solar system that's going to offset or eliminate their power bill. And so the whole design of this program it's a research program approved by Jenny that wants to understand how they produce better homeowners, better performing homeowners. And what they found is their savings on the low down payment segment was so low that if they could just give them a little boost, that they would perform better and they would be more successful in the long term. And so this program really is phenomenal if you have someone who's going FHA and you want to be a hero for the agent and for that individual. You can present this opportunity to them. Yes, they do need to take solar. It's a part of the deal, but I would just say, don't lead with solar. Lead with, would you benefit from another $13,000? I've got a very simple solution for it. So Simply Solar has really taken off. We launched it. That's the one we rolled in 2 weeks. We launched it in November, and we've helped a lot of folks with this program. And like I said, we're actually reaching out to people who are creating FHA loans to say, hey, just want to make sure you know about this as an option. This is an opportunity for you to provide added benefit to your consumer. And in a lot of cases, when they present it the right way, it's a home run. So we do carry the escrow ourselves. So we do an escrow holdback, and then the solar has to be installed within 120 days. So we help to manage that process, and we're working with the best solar sales and install teams in the country. We're very selective about that experience. So we kind of started slow and really picked the best folks by market. So expect a lot more there. We're going to expand that to non-QM, right? So we're going to expand that same structure to a non-QM loan where we can roll the solar into non-QM loan as well. Philip, you want to jump back in? I know we got more product to talk about.
Yeah, you got it. And definitely Simply Solar is something that we absolutely it's taken off since we launched it. And we recently expanded to another like 20 some odd states over the last couple of weeks. So, more to come. Again, that is an opportunity. We do deep dive sessions on Simply Solar. I believe we have another one set up for next week. So keep an eye out for TLS marketing email, reach out to your account executive, but we do have a real big deep dive session around Simply Solar. And then last but not least, Home Again is something that we have. It is a program that offers zero down payment financing for borrowers who are impacted by a federally declared disaster. We've seen a bunch of them, unfortunately. The hurricanes in Florida, got the best of us this past year. We've seen the fires in Southern California. Hawaii's been impacted. There's always a need, for relaxed guidelines to help those borrowers out. But those just to recap this, from an innovative lending standpoint, non-QM, our commitment to non-QM and what we've got going on there. HELOCs is big, something you absolutely should be taking advantage of with your current book of business. Buy before you sell those are door openers for LOs that are trying to get into realtors' offices, right? That's an opportunity to set yourself apart when it comes down to buy before you sell. I would say the same thing with Simply Solar and the solar program that we've got offered there, because your realtors, again, this is something that not everyone offers out there. And then last but not least, the Home Again program. So as we wrap up here, basically just from a standpoint of with TLS and with our service speed partnership, you kind of heard a lot of things today around what we do. It is that Will mentioned, people is our competitive advantage. People is, the people that we work with, the people that you work with. It is a family dynamic. We've got a very strong culture here. And you're going to find that out when you partner with the Loan Store. Our AEs, I teased it before, but I think that we've got the most experienced AEs, in the wholesale space today. And I would say on average, you're talking of 15, 20-year experienced AEs in the industry. And so, what you get with that is when you pick up the phone and you have that deal that's not a cookie cutter deal that doesn't fit in the box, you want to have a partner that you can, get on the phone and talk through that scenario and find out if that's a doable deal or not. Our account executives, many of our account executives also have or had underwriting background. And so they know how to help structure deals to get there. And so, I think from a sets us apart from others, again, experience in the people. We mentioned earlier about efficiency and speed. We are embracing, technology, and all the things that will improve your experience and our efficiency, so that, again, just preparing for when rates do, come back and come down. We're going to be as efficient as possible so that you continue to see those, that efficiency, no matter what interest rate environment. And then I would say from an underwriting standpoint, like our account executives, our underwriters are also experienced. We've got, again, 15, 20, 25 years experience from an underwriting standpoint. You're not going to see, that experience is going to help, win more deals. I mentioned relative to non-QM, how our underwriters are deal doers. Same applies to our agency and other products. They get on the phone with you. They're not afraid to have a conversation with you, talk through approvals or conditions and things like that. From that standpoint, unlike others or other companies out there that you've got to create a ticket, or you're dealing with someone maybe a little less experienced there. A few other things here, really to drive home. I would say, we mentioned technology. We're embracing it. The Smart Start that's out there. Our partnership with ARIVE makes us all more efficient around that standpoint, and that efficiency creates faster turn times, faster decisions, gets to closing faster, helps you meet your contract dates with your realtor partners and your borrowers. And then last but not least, I would say, as I mentioned before, we really are looking for deep relationships. We're a true partner, not just another lender. From everything from product to process to pricing to technology, all the things that you need for a true partner, and a partner that has evolved into something that isn't just agency or isn't just a niche lender. We want to be your one-stop shop. And so, those are the things, in my mind, in our mind, that I think, really set us apart and really want to be a partner with you for those that aren't currently doing business with the loan store. So, Will, I'll turn it over to you to kind of wrap us up here as we come to the top of the hour.
Yeah, again, I go back to it. We love wholesale. We love supporting the broker community. We're really excited about 2025. I think Philip touched on it. We're a one-stop shop with experts to back you, and we're going to bring more innovative product into the market. We're very excited to help you win more loans, right? We're always trying to get better. We're always trying to get better. I think that the market and the competitive nature in wholesale requires that, right? If you must thrive to survive, right? And so, we appreciate the ARIVE relationship. I think you guys have done such a tremendous job of building a great ecosystem. Harish, I always use you as a positive analogy. I'm like, that guy is the only technology guy I know who actually hit the timelines of the features, that he said he was going to bring. So y'all have done something really special with ARIVE. I'm really proud of you guys and proud to be partnered with you. So, for everybody out there, we're going to get through Q1 and we're going to crush it in 25, and we're here to support you. We appreciate any opportunity you give us, and we're going to have some more cool stuff to talk about. So can't wait.
Yeah, thank you. Thank you so much, Philip and Will. This was such an awesome conversation. You gave us so much insights. I will also give a shout out to Lone Store, and previously Home Point. You guys have been great partners of our even Caliber for a long, long time. So thank you so much for collaboration, support, and we are aligned culturally. Even for us, people means everything. We have an absolutely amazing team, very talented people. That's why we are able to build technology so fast. Just like you guys can roll products fast, we can build tech, fast as well. There are some questions which I would like to take up. I mean, if you, I know Philip, you answered a few of them. If you want to repeat that for the audience, that's fine as well. Like, I think it should be good to just kind of say someone asked about pre-approvals on DSCR loans or anything you can guide them. Like if clients are shopping around, there's a non-QM situation. You talked about income analysis happening. So how should they approach the situation when the client is shopping and their loan, the loan will be a non-QM loan? Anything you want to kind of say there?
Hey, thanks, Harish. Yeah, and trying to, as we're kind of going through, trying to get in there and answer a few of the questions as well. But I think one of the questions was, do we offer preliminary underwrites for DSCR loans for client shopping? So on one hand, we don't do TBDs. However, a DSCR, calculation is relatively easy and definitely something that, work with your TLS account executive to kind of help structure that deal. To give you a better insight on what what that borrower would qualify for. I think one of the other questions that I saw was manufactured home on I-10. Not sure if we're going to roll out manufactured homes on I-10, but we will be rolling out an I-10 program here in the next few weeks, and more details to come. I'm not sure, Will, you may have a little more insight on what the guidelines look like, but I would say check back to see if manufactured is going to be in that I-10 program.
Yeah, we're not there yet. We'll probably be there in the next day or two where the guidelines are completely solidified. Right now, there's a little bit of negotiation as to which back-end funds we want to align with, and there's some differentiation as to what they'll allow. So we'll probably get there by, in a couple of days, but not just yet. But maybe we can take the information back and follow up with an answer.
Yeah, for sure. All right, and then one question here: when will Florida open up for buy before you sell? We did roll out Jacksonville and Orlando on January 1st. I think we are looking at additional markets on March 1st, so stay tuned on those additional markets. I do expect that we will roll some additional markets there for buy before you sell. Coming out soon. I'm just kind of scanning through here. Is Illinois included in Simply Solar? Yes, I think that's a state that we just rolled out over the last week or two. Do you offer non-QM for first-time investors on commercial properties? We do offer non-QM for first-time investors, and we do also offer multi-unit properties, up to 6 to 9 units, and so we'll have to reach out to your TLS account executive for sure on that specific scenario. And let's get a few more details on that as well. Foreign nationals, yes, we do offer foreign nationals on our non-QM program from a refinance standpoint. So that would be something there. Let's see here. Is there any possible way to sample these programs? I realize that everything's case by case, but examples to help me understand petition programs, candidate needing a DPA, and solar programs interesting with cash back. Easiest answer, Stephen, would be reach out to your TLS account executive. Yeah, because we can, we can give you those. We can walk through a few kind of Simply Solar programs. One thing I will say about Simply Solar is that it's not a down payment assistance program. That's one thing that, like, it sounds like one, but it's not. And so that, I think, you can get more detail there from your TLSAE. We also have details around Simply Solar previous webinars that we've done, those deep dive webinars that I mentioned earlier. We have those on our marketing portal as well. If you don't want to wait for our next one, because again, a lot of detail there. This is one of those programs that, not your straight up, like cookie cutter type deal. You've got to see it a few times. You've got to do it a few times. The more you can the more you can see, the better there. So we'll keep running through some of these questions. Brenda, thanks for jumping in as well. Will, looks like you're jumping in as well. We are at the top of the hour, so I want to be respectful of everyone's time and turn it back over to Harish and Amy to for any parting words.
Yeah, like you said, I think we'll take these questions and maybe get them answered and respond to anyone who is asking. But this was an awesome session for all of us. We learned so much. I would say you guys have been market leaders and market disruptors in bringing new products to market. You were the first one to launch, buy before you sell, which was an awesome program given how the rate environments were. You launched your 5-day HELOC program. That has also been very well received. So again, kudos to you and your team for launching these innovative products that helps the broker community and eventually the consumers. So thank you for your time. Amy, do you want to say anything at the end? Do you want to?
I actually have a lot of questions, but we're at the top of the hour too. But yeah, no, I'm just excited. AI, I know that there's a high cost to manufacture alone, right, on your side. So maybe if you can just sum it up with 30 seconds. Are you looking at AI from the originator standpoint as far as giving them tools, or is this really kind of a back-end operational thing to create efficiencies and be able to kind of lower the cost to produce loans and help you guys grow? Or is it both?
Yeah, I'll take that. I'd say both. We'd start with getting our costs down, right? Cost and efficiency, and then the benefit to the broker there is speed. But then we're also going down the path of, what are the additional sales tools that are kind of going to help the upfront process? In addition to that, I think there's a big impact on processing a loan, right? So we can translate through our conditions project that we have going. We're looking at AI being a component of that so that it makes the processing of the loan much more streamlined. So from a front end sales perspective, we've got that in view. From an efficiency and speeds standpoint, that's kind of our first hit point. And then for the loan processors, I think that we will be able to massively impact their experience as well.
Very cool. Thank you.
Right. So this session has been recorded and the recording will be available on ARIVE's YouTube channel within a few days. So if you want to come back and listen to this again, this was such an awesome conversation. It'll be available in a couple of days. But thank you, Philip and Will. Thank you for your time. Thank you for the partnership. We'll be in touch. Thank you so much.
Thanks, guys. Y'all have a great week.
Bye. You too. Thanks.